minutes before I find my way out of this place. So the documents have actually been shared, and from our previous meeting, we'd seen how we make year-end adjustments. I think we also agreed on how to prepare the income statements for some question. That was question 3 in our LPM question paper. So then I was to add another question, which I've shared for the advocate's accounts. So very quickly, I will go through that question 3, being the balance sheet. Then we should be able to conclude with the advocate's accounts. So you remember the question that we were doing, and we had 2 partners, Frame and French. And so we'd done the P&L and appropriation account for the partners, and we even went ahead to share their profits. So then the next thing is that for you to be able to do your balance sheet, the balances in the capital and the current account must be worked out. Quite a mouthful. But once you've done all that donkey work, then that is what you take on the capital side of that balance sheet. So then a capital account would look like that. You'd have the balance that has been brought down, or the opening balance. And then you'll have additional capital that has been introduced. You will have, if there is any capital that has been withdrawn, and then you shall have your capital balance. At this point, it is also important to note that you can use the fixed capital method or the fluctuating. Fixed mean that you will not do any adjustment in the partner's capital account, but rather all those adjustments will be taken and worked in the current account. So then the fluctuating, then you're able to adjust all those factors which affect the capital in the capital account. So for our case, our partner's current account will be looking like this. We'll be having our balance brought down, or the opening balance, our interest on capital, any salaries paid to the partners, the share of the profit and loss. Then we will be having either our balance carried down. Of course, on the debit side, we will have the drawings, interests on drawings, and the profit and the loss share if it is a loss. Allow me to note that at this particular point, a partner's current account can have a credit balance carried down, which means that at the end of the next period, it would be a debit brought down, which is more of a loss, and it means that the partner drew more than came in. We mentioned the rule of Ghana versus Murray, that in the event a partnership is being wound up or there is dissolution, then the other partners will share that loss in their profit sharing ratio. I've just reprojected that particular account. All you need to know is what goes to the debit side and what goes to the credit side, just like our civil procedure rules and our criminal procedure rules. These are our accounting rules. So then see what goes to the debit and what goes to the credit. The note I've talked of, the opening balance, may either be a credit balance or a debit balance. And we are going to see how that is done. As part of your workings, it's important that you show these current accounts adjustments and the capital accounts as part of your workings. The reason is you may have worked it out very closely, but then you've picked the wrong figures to your balance sheet. So if the examiner has seen these workings, for these particular workings, there will be more marks here on the adjustments of the current account as opposed to just that one final figure. The final figure that would go to our balance sheet is this 34,909. So our balance brought down for frame, we were told, is 4,100. We paid him interest on capital of 5,000, and we paid him a salary of 30,000. And the share of profit was 3/5 of that 45,717. And so then that is 28,549. So the credit side stood at 67,609, and the debit side was 31,800 plus 900. So then the balancing figure is going to be our balance in this current account, and that is why what we are going to take as his balance for the financed by the balance sheet. For French, he had a balance brought down of 1,200, paid him interest on capital at 3750. He didn't have a salary, but his share of profit was 19,006. So if you look at his debit side, 28 plus 600, his debit side is more than the credit side, meaning that he overdrew his account. And so then this would be a debit account, a typical example of losses that would then be shared at the point of dissolution in the profit sharing ratio. So then his balance carried down in this account is going to be 4844, and that account balances at 28,800. It is these adjustments that are going to give you marks. The balance that you are carrying down will give you a mark if you've calculated it correctly in the balance sheet. So you will get a mark for this 34,909, and this balance
You lost Molly.
Sorry, guys. Kenya Power decided that they are going to do their thing, and so I have to tether my phone so that we are able to do this once again. Are you seeing me now?
Yes, yes, we can see your screen.
Yes.
Yeah, somewhere in the quarter and the power went off, so then I now have to use my phone just to be on a safer side. So I was explaining that the workings of these two accounts, that is where the bulk of the marks will be. So posting the balance, correct balance brought down the interest on capital, the salary, the share of profit, the drawings, the interest on the drawings, and your balances will give you the marks that you need for this. Of course, for the fixed account, fixed capital, or rather the capital account, we said it is fixed. We are assuming that we are not affecting, so their capitals would remain intact at 100 for frame and 75 for the other one. Of course, your trade and payables, there was a 150 that we had not adjusted. We are adjusting that and that provision at that point. So then if you come to your balance sheet, your land and buildings given at 210, accumulated depreciation is at 55, your net book value is 155. Furniture and fitting, 82, accumulated depreciation is 24, you have 158. Your current assets inventory at 74 210, trade receivables at 61 250. I've adjusted with that 150. Cash at bank is 60 110. Total current is 141 890. Your total assets are 300 290. The capital accounts, we said because they are fixed, and I've just indicated fixed versus fluctuating. So the capital for frame remains at 100, French 75, that gives you 175. And then their current accounts, frame is at 34,903, and French is at negative 4844. You take the two, gives you 30,065. So the owner's capital is 205,065. Long-term liabilities, or rather non-current liabilities, we have loan from Prince, which is 65,000. Of course, then we have our current liabilities of accounts payable, 26,590. Office expenses, an accrual of 21. That wages, 720. Our provision from the TB is 1,400. And you realize that our total liabilities and total assets are not balancing. There's 300,890 and the 300,290. We have an imbalance of 600, and I told you that if you go to your trial balance and you balance, it is balancing at 640,001 against 640,601. So the examiner just forced the trial balance to balance, and that is why I also told you that you don't need to. Are we still there?
Yes, we are.
Yes, Molly.
Yes, when I disappear, tell me. I'm in the middle of nowhere, so if I lose my network, just alert me. So
Okay.
I'm saying the gist of all these things that we've been doing is to understand that when it comes to the partnership accounts, then the key items that you need to work on are the current accounts for each partner and the capital accounts, which under the fixed capital method would almost remain intact. So from this, your workings, then you go and put the rest of the items on the balance sheet. The only thing that would give you more marks is here and those other adjustments that we've done. So that is why I did not want to introduce this because it had a little bit more of working. So if this part had 5 marks or 4 marks, 4 marks, you must show you are working. So you'll get the current account workings plus maybe half for this, and you get the full mark. So just concentrate on that so that you are able to get the full marks for that. If you are keen, we'd indicated that the question did not balance, but somebody forced it to balance at 640, 601. If you add the debit and the credits, you see that imbalance is 600. So forget about the balancing. Examiners also force these things to balance. So you pick your marks and run away with your marks. The more marks you get, the better for you. So that is the gist of doing that. I would very quickly run to the other example. The workings will be available to you, and I believe by now they've been shared.
Yes, yes. They've been
Somebody's
shared.
saying that they can't see my screen.
I can see your screen.
It could be from his side. It could be from their side.
Now I can see maybe there was a problem on my side. Thanks.
Yes. So now I've brought a question. I call it question 3, and I'll read it for purposes of moving a little bit quickly. I believe by now, as we are reading, we are able to identify the credits and the debits very quickly. And this particular format of question is now not giving you the trial balance, not the difference. This one is giving you the balance sheet. So meaning that it's only the balance sheet items that are given here, then the P&L and all that you need to adjust are given in the additional information bit. So the following is the balance sheet of Maena and Company Advocate, a small size law firm, as at 30th of April 2006. The non-current asset, they have equipments at 1.5 million. Take note of the truncation when you are adding so that you don't add millions and thousands. You must make sure that the terms are alike. Furniture and fitting, 500. Library books, that much. Total non-current, 2.3. Current assets, work in progress. We had defined work in progress. And what we are having here is the closing work in progress. We are going to use it to calculate our fee income. Then there is stationery at 80. There is clients, disbursements. These are things that we've paid for our clients. And there is cash at bank for office of 350. And for the clients is 280, making it 1640. Adjust that 280 to mean clients because we are going to bring those balances down. So then total assets is 3.94. His capital is 3.3. And the creditors are at 310. And the client account at 280, total 590. The balance sheet is balancing at 3.9. I again reiterate that this is a balance sheet. We've been looking at trial balances, so don't confuse. So the firm carried out the following transaction in the year ended 30th April. What we are given here is in 2006 as per the balance sheet. So what is there as at April 30th, 2007 is what we are going to adjust. That they charge clients 1.420 million for services rendered. That is his fees. Of course, you know that we are going to take this, add the closing work in progress, you less the opening, so that you get your fee income. So once you see the charge client, then you know what happens to that. Then he received payments of 850 from the clients. Number two, he received a further 1.6 on behalf of clients and spent 270 to pay rent and 820 to purchase land on behalf of the client who had a credit balance with the firm. The firm used 500 to purchase ordinary shares from the stock exchange on behalf of a client who had a credit balance of that. You remember we had indicated that you might make these payments for clients who have sufficient amounts. That was the beginning of what I'd introduced the other time. But at times, clients might also not be having money. So then you pay for them, and that is what builds the disbursements that we are treating as assets. Then a client can also authorize you to transfer money. So this particular client authorized a transfer of 600 from a client's account to the office account. Of course, the firm also received 180,000 from clients in settlement of disbursements that had been done. Clearly, we had paid for our client, and now he's reimbursing us that 180,000 that we had paid on their behalf. Another client deposited 350,000 for purchase of land that was to be purchased in May. The firm paid salaries and wages and office expenses of 70,000. Those are free marks you pick very quickly by putting them in your cash book. Creditors balance is in relation to purchase of stationery. The firm purchased stationery worth 280 on credit and paid creditors 430 during the period ended 30th April 2007. On April 30th, stationery at hand was valued at 110. The examiner is trying to see if you are able to get the correct balance of the creditors. He's telling you you've been given the opening balances, you've been told what was purchased, you've again been told of a story of stationery that was purchased, but at the end of the period, this stationery that was purchased at 280 was now valued at 110, the net realizable value, what we call it. So what would have happened uh, if there are goods that maybe some of it had been destroyed, or like the CAMSA equipment, by the time the PPEs, by the time you are buying them, you bought them at a higher cost. And now the market price, you can only realize 110 from the 280 that you had bought. So then there is a loss. There is a loss, 280 minus 110. There's a loss on that particular stationery. That is what the examiner is trying to see if you are able to to get. So when you see a skit like this, then as we've always said, you start redirecting your mind to the usual culprits. The firm provides for depreciation of non-current assets, equipment at 10% per annum, furniture 12.5%, library books 20%. The partner made total drawings of 650 from the firm in that tier. Work in progress as at 30th of April, which had not been invoiced to clients, was valued at 280. So we said work in progress, closing work in progress is the cases that we've not concluded. Very interesting. Even before we start working on that, let me introduce you to two accounts that are maintained. There's the cash book, and the cash book has the debit side and the credit side. The credit side has a column for office and a column for client. We had defined what we mean by office account and client account, recording what we have paid and what we have received, and for the client account, what is owed to the client and what he owes us. So then the cash book, you will see the debit side has office and the client side. Of course, the credit side also has office and the client side. This credit side is basically for recording what has gone out, just like the way we treat our cash book on the other side. This is the giver. So what comes in is debited. It's an asset to us. So we debit it. You need this cash book because it is necessary if you are to get your closing balance sheet figures. So just like the current account, you need to post the right figures on this so that your balancing figure at the end, the 230 and the 440, is what you are going to take on your balance sheet. So after posting all those stories that you've seen there, the essence of posting them is to see how you come up with these balances of 230 and 440. So the bulk of the marks will then be for the correct posting in this cash book. I've just put a note there that before I got these 230 and 440, my total debits were 1980, meaning the credit side was less. So, and the total credits were that. So that is how I got the 230. And for the office, the client side, the debit side were also more. So that is how we balanced it. I'll come again to this. The client account also has a debit side and a credit side. The debit side has office and client, and the office side. The credit side also has the caption for the office and the client. So what happens again? I told you that the figure of 440, you will see it twice. You will see it as an asset and as a liability. It is an asset under your cash book because you're going to bring it down on this side as your asset. It's money that is there. It is a liability because then you will bring it as the balance brought down within the next financial year on the credit side. The office column of the current account shows your disbursements. Your disbursements are basically what you paid for the clients. You should be able to see these disbursements in the balance sheet. So your client account would show what you owe your clients and what your clients owe you as a credit and debit. So then, having shown you that, allow me to very quickly take you to the workings for the income statement. The format of the income statement still remains the same. We are told that the cost charged to the clients were 1,420,000. You add closing work in progress. Where do we get the closing work in progress? Additional information down here. Less opening work in progress. Where do we get the opening work in progress? In the balance sheet, the 480. So what is our income for the year? 1.2,220,000. So you will get marks for identify the cost charged to clients, identifying the closing work in progress, and lessing the opening work in progress to compute your fees for the year. The creditors account. Let's listen to this to work gear your freewheeling so that we are able to get it. Creditors, these are liabilities. So the balance brought down is 310. Where do we get the 310? We get it from the balance sheet. If you go to a balance sheet, creditors is given as 310. So we are bringing it as a balance brought down. Then we are told we made a purchase of 280, but we also paid creditors 430. So if you add our balances of 310 plus the new purchases of 250, we have 590,000. So when we pay creditors, we reduce. So ordinarily, the balancing figure would be our new balance for creditors that we are going to take to the balance sheet. So the 160 would be our new figure for creditors for purposes of taking to the balance sheet. What we had at the beginning, we added purchases, we less what we paid the creditors. What we have is our closing balance. I hope that working is properly explained. For the stationery, we had a purchase of 280. And out of that, we could just work it directly, just like I'd said. We bought them at 280. At the end of the day, our closing balance was at 110. So the figure that we require to balance the 280 and the 110 is the 170, which is that loss which we had explained earlier. And I gave the example of the PPEs. That is this particular additional note that we bought stationery for 280, but at the end of the year, the net realizable value was 110. So this 110 is the figure that we are going to take to the balance sheet because stocks are valued at net realizable value. Net realizable value.
Yeah,
What you
madam.
are able to what you're able to fetch in the
Mwalimu,
market. Yes?
it's David. I had raised my hand and I think you can't see it.
Yeah, let me just finish. Then I'll give Linda. Linda, note down.
Okay.
Once I've finished, then you'll be able to ask that. So I was explaining this scenario so that I don't lose my thought process. I was giving the example of the KEMSA PPEs. Why would you buy goods at a higher price and at the time when you are now taking them to the market, then you fetch a lower price? The goods were purchased at 280, meaning at the point of purchase, either your prices were overstated, and so that is why now your net realizable value is at 110. Uh, so if you go then to your income statement, you will see your fees earned, which we computed. Office expenses, that was direct and indicated. There's a note there that is telling you that salaries and wages were 280, office expenses 70. Uh, the depreciation, there's a working for the depreciation, which we are told that depreciation is 1.5 at 10%. At this point, it is direct. So then straight line, so you don't worry about the reducing balance or anything. So the examiner has given you, made your work easier using straight line. Furniture is valued at that, so the depreciation is that. So the depreciation expense is 150,000, 560. Then we've also done a working on capital. We are told that our capital was at 3350 from the balance sheet. Then the drawing at 650. So our net capital would be that. So I'm just giving you the overall figure. So if you go to your income statement, this is how these figures are going to sit. The income earned, you know where we've gotten it from, is the cost charged. You add your closing, work in progress, you less your opening, and you get that. Then you less your expenses. Some of these expenses are direct. 70 is given in the note. 280 is also given. Depreciation, we are calculating. Then there is the loss on stationery, which is also an expense. The examiner might also give you a scenario that resulting into a gain, and that gain then you would credit, just the same way we did with the decrease in the provision in the other question, which was a gain. So that gain was treated as other income. So then your retained earnings or your net profit then would be 427,500. So remember, the retained earning would go under owner's equity in the balance sheet. I'll give a preview just on the balance sheet. Once I've given that preview on the balance sheet, then we will go back to the cash book and the client account just to show you how you will be earning those marks. your balance sheet, you will bring your non-current assets. Equipment would be 1350. That is the values that you've been given in the balance sheet, less your depreciation for the year. That is very direct. You get your marks very quickly. The furniture, this is the net book value. What you have in the balance sheet, less the depreciation charge for this year. For the library books, again, what you're having in the balance sheet, less depreciation for this year. So your total non-current assets would be 1937,500. Your current assets, you will be having your closing work in progress. That is something that you can pick very quickly because it is down there in the additional information. Stationery, 110. The disbursements for clients. You remember when I showed you the client account and there was that figure that I highlighted in red, the disbursements to client on the client account. It is an asset for us because these are amounts that we have paid on behalf of our clients. So all those stories that you've been given in those notes are basically to test if you are able to compute or post those transactions in the cash book and the client account. And the result is you should then be able to get the correct closing balances, which represents disbursements for clients, the 560, from your cash book, your cash at bank for office, and your cash at bank for the client. So your cash at bank for the client will be an asset because the account belongs to you, and that is why you are seeing it as an asset. But it is also a liability that you are going to see under the current liability side. So what does it then tell you? It therefore tells you that there is a side of your cash book that must always tally with the side of your client account. And that is the client money that you are holding. It must reflect in the cash book and it must also reflect in the client's account so that this again comes and it shows as a liability. So you will always see some figure appearing under current assets and under current liabilities. Even in the example that we did in that P&L, when we did the balance sheet, then you will see it. So then now, if you don't post the correct figures in those accounts, then the only thing that you will miss is this mark for 560, which could be half. This other one, the 230 half. This other one also maybe a half. And these are half. So those are 2 marks. So the bulk of the marks will be here in the cash book. And for us to be able to do the cash book, the first thing that we need to do, they are the balances that we must bring down. And the balances that we are bringing down, we already been given in the balance sheet. So you bring the balances at 350 and 280 for client. You also bring the balances in the client account for the office and for the client. Then we start recording the transaction. And for recording the transactions, I would request that somebody reads for us the additional notes one by one. I will be showing you how it is posted as I project this. And the Kiama, if you have the question, may I request that you read for us the first additional note as I explain. Yes.
Let me open the question.
At this point, still there is no need for panicking. We just need to know how it is posted so that we proceed. So, David?
Yeah, in a minute. Um, right here on the desktop. Okay. So the first note, additional information, charged clients shillings 1,420,000 for services rendered and received payments of shillings 850,000 from clients.
So, under that, the 1420, those are the costs charged to the clients, which we have already used to adjust to get our fee. So, we are told that he has received a payment of 850. So, in our cash book, we have debited our cash book and credited the client account. Our cash book is the receiver. You remember where we said loosely that you debit the receiver and you credit the giver. That money has been given, it goes to our office side, and the client account, we credit the office side. And that is being done after we've brought down the correct balances. The next transaction, so you are seeing a debit on the cash book, office side, and a credit on the client office side. The next note.
Note 2, received shillings 1,680,000 on behalf of clients and spent shillings 270,000 to pay rent and shillings 820,000 to purchase land on behalf of clients who had credited balances with the firm.
So that question, the first transaction is the receipt of 1.6, which we are debiting our cash book, but the client column, because it is coming from our client. And then the corresponding credit is the client account the client is giving us. So we are crediting the client account at 1680. The client is the giver, the cash book is receiving, but on the client side. But then we are told that he has paid rent for a client of 270. Yes. So you will see that now money is going out from our cash book to pay. So the cash book is now giving and the client is receiving in the client account. So we are debiting that rent for client in the client account. Again, we purchased land, the cash book is giving, but we are doing it on behalf of a client. So the land purchase must also be indicated in our client account because our client owes us this 820. The one that you might need to check a little bit is that there was a purchase. He used 500,000 to purchase shares for a client who had a credit balance of 180. What belonged to the client was 180, but we purchased shares on his behalf for 500. It means we made a disbursement to that client of 320. So 180 came from the client account and the 320 came from our office account, making the total of 500. We had said that a client may have sufficient amounts, but other clients might have insufficient accounts. If you read my previous notes, and this is how we treat that. So then you will again come and debit the client account with what was purchased for them, and our office account with the 320, which means they owe us that 320. The next note, Yama.
Yeah, note 3, you've dispensed with that the firm used 500,000 to purchase ordinary shares from the stock exchange on behalf of a client who had a credit balance of 180,000 shillings with the firm.
That is explained. So we go to the next note.
Note 4, the client authorized the firm to transfer 600,000 shillings from the client's account to the office account.
So our cash book, the client is giving us money which is received by the office, and that is indicated as a contra. If you remember your cash book, there is a contra. So the credit is coming from our client side of the cash book, and our cash book office side is receiving that amount. In our client account, that is also reflected because our client has basically reduced what is owed to him. So that reduction of what is owed to him is affecting our office column, which we had said is our disbursements. So he has reduced our disbursements by 600, and he has also reduced what we owe to him by 600. That is the reasoning and how you report that. We go to the next.
Note 5, the firm received 180,000 shillings from clients in settlement of disbursements made to the office account.
So if the office received, so we will debit the cash book, the office side, that is money that came in, but we are also going to credit the office side of the client account so that our disbursements are reduced. The other way of reasoning would be this transaction. What is the effect? Does it increase our disbursements or does it reduce our disbursements? does it increase what we owe to the clients, or does it increase what we owe to the clients? Those are the effects of the transactions that we should be able to interrogate. So for this particular one, reduced our disbursements, and it also reduced what we owe to the client. We've also recorded it in our cash book. So the next one,
Note 6. A client deposited 350,000 shillings with the firm on 28th April 2007 for purchase of land in May 2007.
so our cash book is receiving that 350, and that money is for the client. So in our client account, this increases what we owe to the client. So that is why it is credited. It is the client who is giving us that cash of 350. So then the next note,
The firm, note 7, the firm paid salaries and wages of 280,000 shillings and office expense of 70,000 shillings for the year ended 30th April 2007.
that is very direct. You just take it to your cash book as it is, the 280 and the 70, and because it is on the credit side, where is the corresponding debit? It is going to go to the P&L, or as an expense. So you will charge them in your P&L as expense from your cash book. So the other entry will be in your P&L. That is why you've seen they've been picked and taken there. We also paid the creditors an amount of 430, and somebody took an amount of 650, that is drawings. And of course, when you see drawings, you know it affects your capital. And at the end of the day, having captured the transactions of your cash book, the cash book must balance. The debit side must equal the credit side. Any amount, or rather the balancing figure, is what we are carrying forward, and that is what is going to reflect on our balance sheet. And you remember in your balance sheet, you saw this figure of 230 and 440. We got them from the cash book. So if you mispost any of these figures, your balance that you are carrying to the balance sheet would be wrong. But for every correct entry that you've made on this, you will get marks. So then you will realize that maybe in this table, if every take is 1/8, then there will be a take for all this posting on the debit and the credit side, and this also. And from this table alone, you might have 5 or 6 marks by posting the transactions correctly. So I'm just trying to explain that our total debits for the office was 1980. For the other side to balance to 1980, then 230 is the balancing figure. The total debit for the client is 23. For the other side, which before putting these red figures was at 1870. For it to move from 1870 to 2310, we put 440. So that then balances, the balancing figure will then now be taken to the balance sheet. For our client account, it must also be balanced. And this one, you will have the balances on either side. There would be a balance carried down on the debit side. That balance carried down in the next financial year, it would be brought down as a credit balance. It means that that is a liability. And that is what we owe our clients. So you will see it as a balance carried down on the debit side, which is correct. It therefore means that we owe our customers 440. Our cash book is also telling us that indeed that is what we paid out for our customers, what we actually owe them. So the balance carried down on the credit balance, we said that it is the disbursements, what we had paid on behalf of the customers. It is a credit carried down, which means in the next financial year, it will be brought down. It is an asset. So we owe, should the firm cease to be a going concern today, we have in our bank account 230 in our office account and 440 for the clients. So should we go down today, then we must pay our clients 440, and that is the liability that we are saying. But our clients must also pay us 560. So back to the balance sheet that we had explained. The other figures, all that trouble from that note 1 to around 7, all that trouble feeds into these two accounts, the cash book and the client account. After it has fed into this, it is just to show us that should we now go bankrupt, how much do we have in our accounts? We have money of our own of 230, clients' money 440. So should we then go or decide to dissolve this, then we must pay our clients 440, and the disbursements of our clients that must be paid is 560. So once you've made your format of the balance sheet, which doesn't change, you can put this. You are seeing clients' disbursements, the 560, what our clients owe us. Having posted that correctly, you will get a mark for that 560, the correct bank balance in our accounts for our office accounts, and the correct account for our clients, the correct amount of disbursements, the amounts that we have paid for our clients. And then you adjust your capital, your retained profit is what you have on your income statement of 427,500. You bring it On the capital side, you add it there, less your drawings, and you have your 31,27,500. So your creditors balance, there was a working where we took our balance brought forward of 310, added the purchases, and we were told we paid 430. And so the balancing figure was our current balance of creditors and what we owe our clients is 440. So what is the implication of this? It means if we were to wind up today, our clients, the money in the account, as shown in our cash book, will be able to pay them. And because we have 230,000, we are also able to pay our creditors. They are 160. So we are highly unlikely to have a creditor moving forward and telling us that we don't have money. With that, I would consider that I've discharged my burden, highlighting on the key areas. And so I've given you a 360-degree approach for the partnership accounts. And for the partnership accounts, we've done a variation of questions. Looking at these questions, if you don't get them in this accounting for lawyers, then you are getting them in some worked example for CPS. And these guys are copy pasting plus the errors. So rely on the moderated workings that we've done. I'm not sure, I could also be having some errors, which I don't. I'd given Chiri to have a look, and I believe that is how we are able to get the other 600, which is an error in that question 3. So my take is look at the quick marks that you are able to do your workings, put the format for the balance sheets. As you do your workings, post the entries so that you pick as much correct entries as possible as and when you get these accounting questions. I would stop at that. I believe I'll start with a question from Kiama. You can now ask your question. Then if there is any other hands, I can answer the same. Any question, Kiama, have I answered you? You may have been answered. If you are answered, then you don't need to ask it.
Thank you. Yeah, I'm halfway. I'm answered. Just to seek some clarification.
Yes.
On note 8, which reads the creditor's balance in relation to the purchase of stationery. The firm purchased stationery worth 280,000 shillings on credit and paid creditors for 30,000 shillings during the period ended 30th April 2007. On 30th April, stationery at hand was valued at shillings 110,000. Whereas I don't have a challenge with the workings, it is on the nomenclature where, since as the advocates, we are not in the business of selling or buying stationery, where instead of recording it as a loss, I don't know whether the other alternative would be to record it as stationery that has been used in the office. say then within the period, what is at hand is what remained in the inventory, in the stock, and what the reduction is what was used instead of terming it as a loss. That is one. Number two.
Yes.
Number two is on note 7. The firm paid salaries and wages of 280,000 and office expense of 70,000 for the year ended 30th April 2007. My question is, as you take it to the expense side of the income statement, would it be appropriate to open T accounts for salaries and wages and expenses, so that then you're able now probably whether you'll pick more marks on that if, for example, you're balancing it with what was in the balance sheet, or do you need now, so that now you can get the double entry aspect before posting on the final accounts. And then yeah, I think those were the two main concerns that I have. Thank you. Otherwise, everything else is clear. Thank you very much for.
I'll answer you. What you said, what we've called a loss, it could be a loss. You can also say consumables. And the consumables, if you consider it as consumables, that argument would still be correct, because consumables would be things like printing papers, toners. At the end of the accounting period, yes, you purchase 280. At the point that you are closing, the stocks were valued at 170. So it can be a loss, or consumables, which is toners, stationery that you had used. And so then, that being the case, what you'd consumed would then be that. For this particular question, it was actually picked from accounting for partnerships under CPA section 3. And so the person who picked it, if you look at this book, Accounting for Lawyers, you will realize that if you go into that book, they are telling you that the loss is 250. So there is an error that has been carried forward. So as you are working on that, be wary of that. So I would rather you stick to this working that we have done here. You will see it in that, but you will see it is carried with an error. That reasoning would be okay. For accounting purposes, we are recognizing at a loss as lawyers. It could be consumables that we don't have. So the correct figure, the 110, that is okay. So the other thing that you had asked was the expenses and the T account. The T account is easier to understand. What I've just done here is almost a T account, only that I just didn't make a T. I was using Excel, so when I copied it, you are not able to see my T, but the T accounts are the easiest to work with for somebody, because if you look at these workings of the creditor, this would be my T account. So from this side, the balance brought down will be the credit side, and this would be the debit side. So the T account would basically facilitate your working in a much easier way. So you're right. The next question, naona kwa hii hall mahali niko ni taya imezimwa, so they're telling me that I should be getting out by now. Any further question? There's a question that I think I've not answered. Yama?
From me, I think, yeah, everything is clear. Thank you so much.
Okay. Any other question, Linda?
Yes, we have one more. Let me just check the hand. It is Kokelo. Please proceed.
Yes, thank you. Could you kindly just briefly explain note 3 again for the ordinary shares? The way we posted it as 320, like I think something that skipped
Okay.
me.
We are saying that note 3, there is there's something that I'd posted in our class group of LPM. Actually, I took a shot of the page from the accounting for lawyers that is telling you what to debit and what to credit. So you are told that this guy bought shares using 500 shillings. The deposit that the lawyers would give you, a client may have given you money. For this particular client, we owe him 180,000. And that is why in our cash book, we have indicated, or rather, let me start from the client account. We owe him 180. Remember the 440 we said it is what we owe our customers. So this same client instructed us to buy them shares of 500. It therefore means that out of the 500 shillings that we spent, 180 was from the client's account, and the 320 we topped up for the client. So out of the disbursements of the 560, the client still owes us 320. Out of the client account, we reduced what we owed him when we paid by 180. So that reduced what we owed him. But when we paid from our office, we increased our disbursements. So in order to determine what we still owe and what we are still owed, then we balance off as we have done there. So you get a scenario like that. You would find direct places where you've been told he paid for a client with a credit balance, meaning the funds were sufficient. When he paid 500 for a client who had a credit balance of 280, then it is you to think through and see that if this client had 180 and we paid 500, then what is the 320? The 320 is disbursements. That is money that we paid on behalf of that client. I think that is clear.
Yes, thank you.
Okay, thank you. So allow me then to request that any further clarification be done to me or Linda and the team directly. And I thank you for having attended these classes. I then think that in the event that there are no further questions, I give this to Linda. If there is anybody with a question or a comment or a clarification, then Linda, you may have them say something as we close this. Thank you. Back to Linda. I'm just changing my gadget so that I get out of this place. Linda, the floor is yours.
Thank you, Nyamolo. Thank you, everyone. I cannot see a question. I do not see a hand. I do not see a question on the chat. So I assume we are okay for now. So I think we'll just bid you goodbye. This was our last session. So you can just refer to the recordings. You can reach out to us, yeah, in case of any queries. I think that is it. Have a good night. And of course, happy reading as you prepare for your bar exams.
As usual, we take the opportunity to thank you guys for everything you've done. We are very thankful that out of this busy revision period, you have found some time to come and salvage this very difficult unit that would have been very steep for quite a number of us. May God bless you very much for that very noble gesture. Thank you.
Thank you, David. Thank you, everyone. Goodbye. Yes.
Thank you, guys, and
Thank
success
you.
in your fourth.
Thank you so much.
We've enjoyed.